I'm Ryen Renalds, and this is Real Estate for Kids. I'm here with Ashley Hickmon, who is a lender, right?
That's right, Ryan. Nice to meet you. Thanks for having me.
Nice to meet you, Ashley.
Yeah.
Well, we want to know some things about real estate so when we grow up, we could buy a house.
Yeah, that's the American dream, right?
Yeah.
We should buy a house. Or 10.
Yeah, oh wow, 10. Okay, so what do I need to buy a house? I heard of something called a loan.
That's
What's
right.
a loan?
A mortgage loan, and I bet you can't spell mortgage because it has a secret silent T in there. A mortgage loan is a kind of loan that you need to buy a house with, and it shouldn't be intimidating. I know it's a little scary word, but it's really just a loan that gives you the money that you need to buy a house so you don't have to save up $500,000.
I like money.
Everybody likes money. So I'm the money person. When you want to buy a house, you come to me and you give me all your info, like your name and your birth date and your social, your income, most importantly, and we look at your credit and we see if you qualify to purchase a home, and then we give you a loan for a lot of money.
Oh, wow.
Yeah.
And what's a down payment?
So the down payment's going to vary, okay? So different loans require different amounts. You could do a loan with down payment assistance, so that's help with your down payment, and that's a really beautiful way to buy. You could actually buy with as little as $1,000. It's not a lot of money.
Oh, only 1,000.
Yeah, or you could buy with $100,000 down. It just depends on how much money you have. Sometimes if you're selling a house, you might have a lot of money you can put down. And then other times, maybe you've just been saving and maybe you had an emergency and it cost you a lot of your money. Now you can buy with down payment assistance and it only costs $1,000.
Wow, I never do that. And what is interest?
Interest is the cost of borrowing money. So right now, you're hearing in the news that interest rate is going up, but the interest rates actually went down this week. So the interest rates are historically super low, and it is just basically what it sounds like. It's the cost of borrowing money. So for example, if the interest rate's 5% and you borrow $100,000, your payment, okay, just before we add taxes or any other expenses, would be $500 because the interest rate's 5%, you borrowed $100,000. That's how that works.
Oh.
Yeah.
And I heard something called a 2-for-1 buy down.
Yeah.
What's that?
It's not like 2-for-1, but it's a 2-1 buy down.
Oh, like a happy hour?
Free. Yeah, it's not like a happy hour.
Oh.
But let's just say you lock in an interest rate at 5%, but you did a 2-1 buy down, which, good news, the seller might pay for that for you. Your first year's rate is 2% less than your total rate.
Wow.
So if you locked at 5, you start at 3, and then year number 2's at 4, and then it goes to 5 and it stays at 5 forever. So it's really a good way to do it, especially if a mortgage payment is a new thing for you. This allows you to gradually increase it over time.
Now, Ashley, I've never bought a home before.
Uh-huh.
So how much do I need to save for a down payment?
Well, there's a few different options. So you need at least $1,000, and I usually recommend $2,000 because you're going to have some other expenses like a home inspection, stuff like that you need to pay for once you go under contract. But right now, because the sellers are willing to help you, you could get into a house with down payment assistance, even if you're not a first-time home buyer like you, Ryan, and you could buy with $1,000 per those programs. If you want to bring your own down payment to closing, you need 3.5% or 3% of the purchase price. So if the property is $100,000, you need $3,500 or $3,000. So not too bad.
Okay.
Yeah.
Very good. Well, I think that'll wrap it up for today. Thank you to Ashley Hickmon.
Thanks, Ryan. Nice to meet you.
Bye.
Talk
Okay.
soon.
Bye.
Bye.